financial institutions and markets. So, financial institutions and markets play a very important role for the economic development of the country. So, see what is these financial institutions and markets is the first unit of the subject. So, we will learn various things relating to the financial institutions and markets in this particular subject. So, financial institutions talks about the institutions which are in the economy, which are in the Indian economy, which provides various services to the customers, which are meant or established for providing various services to the customers. That is called as the financial institutions. Now, these financial institutions majorly deal with the money. So, that is the reason we say it is called as a financial institutions. The best example is the bankers. So, banks, what is that purpose of the banks is accepting the deposits for the purpose of lending. So, banks what they do is they accept the deposits. Here money is involved, please try to understand. So, they accept the deposits and they lend the money as a loan to the institutions which require the money. That is the operations of the bank. Now, banks plays a very important role in the financial system. So, these particular banks and some insurance companies are also there. Insurance companies are the main purpose of that insurance companies are being established is they provide risk coverage on happening a certain event to either the customers or maybe to any of the business house, either person or to any of the business house. We say it is called as a financial institution. Like that, many financial institutions are there, which some are non-banking financial institutions, some are banking financial institutions. These financial institutions has been established in a country so that they can help the people in the country to conduct their personal as well as business operations very smoothly. So, these financial institutions are very important for the growth economic development of a country. India is a country wherein we have a well established financial system. So, this financial system helps for the growth of the economy. So, and what is that markets? Now, these markets are the places where the financial securities or instruments can be bought and sold. So, markets need to be there in order to for the smooth functioning of the financial system. Financial institutions are there. At the same time, the market has to financial institutions create financial securities for the users of that particular financial institutions, and these financial securities need to be marketed. And then, when we have efficient markets in any country, that helps the users of that particular financial institutions to liquidate or liquidate that financial instruments and can convert that into cash whenever they are in need of the money. So, financial institutions and markets play a very predominant role in the Indian economy for the smooth functioning of the economy. Now, we will talk about Indian financial system. This is your first unit, and in this Indian financial system, what we will talk about is the various components that are the Indian financial system. So, I will brief you about the various components, what is there, and the functions of these particular various components of the Indian financial system. So, we have financial institutions, we have financial markets, we have financial services, and then all these comes under the financial components. We have nearly 4 financial components that we will see, and various functions that these financial components are providing. We will learn in detail about these functions. We'll also see the flow of funds matrix. See how this financial system is in such a way that the money has been the money will get flow from the savers to the users, and who will be that in between, who will be the channel in between from savers and movers, or whom we can call it as financial intermediaries. So, these financial intermediaries may be the bank, the other financial institutions. How these particular banks and other financial intermediaries, they are channelizing, they are acting as a channel for flow of money, for flow of funds from the savers to the users, that we will talk in the flow of funds matrix. So, this is a other important thing. Next, financial system and economic development. So, this is also one important topic that we will see now. So, how these particular financial system is helping for the growth of the economy. So, India is one country where the economy is growing very fast and we are considered to be the 5th largest economy throughout the world. So, in the world we have around 200 countries, and among all the 200 countries, India now stands 5th in its economy. So, when you talk about economic development, it talks about the progress of the country economically. So, our country, that is India, is progressing very smoothly, and economically it is becoming one of the superpower in the world. So, this is all because of the strong financial institutions and the markets that we have. So, good financial system that we have in India. So, that helps for the growth of the economy. So, we will see that how efficient financial system will help for the growth of economic development of one particular country. So that we will see. Now, recent developments in Indian financial system also, that is one topic that we will see. And then weaknesses of Indian financial system. Some weaknesses are there. So with which we can say that the financial system, what we have for some flaws, some weaknesses are there that we need to address. And then if we address that weaknesses, naturally we can overcome from the drawbacks that we have in the financial system, and we can strengthen our financial system thereby. So we can grow very fast economically. So with that introduction, brief introduction of this particular Indian financial system related to the unit number 1 of this subject, financial institutions and market, I will now introduce about this subject very briefly. So the Indian financial system is one of the most important aspects of the economic development of the country, as I have told you. So the strong Indian financial system what we have helps for the growth of the Indian economy. This system manages the flow of funds between the people, that is the household saving of the country, and the ones who invest it wisely. So for the betterment of both the parties. Now, this is very important. Traditionally, how the things were there is, we have banks that is there established for a quite long time. Century and decades ago, we have the banks. Now, what is the point here is the banks were there, but the trust of the people on the banks were very less. So, the RBI being established and the RBI taking a very key role building the confidence of banks in the minds of the people. So, people have started saving their money with the banks. Earlier before, how it was is, people who have the money with them, they used to put that money in their safe at their houses. They used to have a big safe, and that big safe, in that big safe they used to save the money. They used to stack the money. So, that is how the mindset of the people were there earlier before. The savers of the money, they used to save in the safe what they used to have in their house. All the time what they have, they used to save. They do not use that money for other productive purpose. What is the other productive purposes? Money that is there, it has to be used by the people who are in need of money, that may be the business people. So, this money which is with the people, the savers, that has to be productively used by the people who are actually in need of money. Now, some medium has to be there so that this money has to be transferred, which is there. The money will be there in the name of the person in his saving account. At the same time that the money has to be or utilized productively by giving it as a loan to the users of the money, maybe the business houses who are in need of money, that money need to be given as a loan to them. So, this entire activity of seeing that money has to be moved from savers to the users. So, we need to have a system that we call it as a financial system. This well established financial system helps the any country, helps the people in that country to flow money from savers to the users, and thereby what happens is the users can use that money more productively, and the savers also on the savings that it has made, they also earn some small rate of interest. Otherwise what happens is, if this banking system and other intermediaries, financial intermediaries are not there, or without, if that is not existing, what happens is the people will save the money in their bank account, and as a result what happens is that money will not get productively utilized, and in worst cases what happens is the money which is there in the safe of the people, that may also, there is a chance that it may also get stolen. And other thing is that will not generate any type of interest or any return to the savers of the money. So, all these are the drawbacks when you have the money that is with you or kept with you by not productively utilizing it. So, the financial institutions or intermediaries, what they do is it encourages the people to save the money with the bank, and the money that is being saved by the people, a confidence need to be built in the minds of the people that your money is safe with us. At the same time, it also generates some amount of interest to you at the end of the certain time duration. And what other thing these particular financial intermediaries and institutions are doing is, this money will be properly channelized to the other institutions which is in need of loan, maybe the business houses. So, they might require some capital in the form of long term capital or short term capital. That capital need to be provided to these particular institutions so that they can utilize this capital for their productive use to manufacture the products or to put it in the money and can do the business very smoothly. So, such type of activities we can only perform if we have a financial system. So, the services that are provided to the person by various financial institutions include banks, insurance companies, pensions, pension funds, etc. constitute the financial system. See, we have various financial intermediaries or financial institutions that are there in a country like India. A best example is about banks. We have different types of banks, commercial banks, we have cooperative banks, we have regional rural banks, we have some other types of banks. All these banks have been established with a purpose of serving the customers or providing some facility to the customers, and thereby these particular banks are acting as an intermediaries between the savers and the users. So this comes under the financial system. We have insurance companies. Similarly, just like banks, we have insurance companies. So insurance companies' main objective is how they do the business is they take the risk of the people who have insured with the insurance company, and if at all some risk arises to him, as per the contract, the insurance company will pay for the losses. That is all about the insurance business. So it may be a life insurance company or it may be a general insurance company. The main objective here is insurance companies will also act as a financial institutions or financial intermediary. So these financial institutions, how the insurance company, as it get money, that money will be utilized for giving as loans to some other institutions which are in need of money. So thereby it helps for the growth of the economy. And then we have pension funds. Pension funds are again, so these pension companies, what they do is they help the people to save the money from their salary on their earning every month, and at the end of their retirement, these pension companies or pension funds, again these pension funds, what they do is the money which they get, so they will be invested on some productive purpose, on productive investment, and at the end of the retirement of a particular person, so these pension fund companies, what they do is they provide a pension to them. So thereby the rest of their life they can use these funds for their well-being. This is how the pension fund organizations and other financial intermediaries or financial institutions are working in the Indian financial system.